All right, everybody. This is Jeff Scott. As you can see, it's March 30th at 2 a.m. Since I'm out on the West Coast, that means it's 11 p.m. And I'm going to try and get this done tonight so I can load it to YouTube and you'll all be able to watch it tomorrow. Go ahead and close this thing up, which you can't see. Make sure I've got everything set the way I want. Broadcast has started. Stop recording. Excellent. So what another lovely week for us who trade growth stocks, and lovely being a negative term here and not a positive term of endearment. Start with our usual weekend review. Let me open up my PowerPoint. This will be a quick PowerPoint so we can get into the slides, into the charts, and I really don't want to be doing this all night long. So weekend review, market under pressure is an opportunity to buy or a time to hide. Today is not 3.3. Sometimes I just need better quality control here. Make that a 3.30. Just pay me the big bucks. You should get this done perfectly. All right. Disclaimer, this is for educational purposes only. Any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker, and I've paid for all the tools I demonstrate. As always, to me, this is all about being your own guru. Find people that you trust, people who you think have a lot of good ideas, learn from them, incorporate them into what's your own strategies, and follow what your trading plan. My trading plan is based upon teachings from Ian Woodward and Ron Brown, Alexander Elder, William O'Neill, Morales and Catcher, Jesse Stein, Mark Minervini, Stephen Bigelow, and others, including Van Tharp and Anna Coling. We all have to have our own trading program. We're all different. We all have different size accounts. And rather than rely on what any one guru says, become your own guru. Read, study, go to classes, and build your own strategies based upon what works for you and your size account. I purposely killed my icons because everybody who knows me knows I have way too many programs. I use TradeStation and Thinkorswim for most of my real-time trading. Yes, I have Fidelity and Schwab, and I have Interactive Brokers, among others. I use HGSI for my predominant aftermarket analysis program, and I use EdgeRater, seasonal analysis, mostly Magenta, but also Best Choice, and then MarketSmith. I'm going back to an old chart here because this really, to me, is an important question. Are we finally running into stage 4 with the big markdowns in the market, or will something, news events happen and we go back up and we have another run up before we fall into the summer and the sell in May? It's a little early, although March can be a tough month, and the second and third quarter can be very challenging in the second year of a presidential election cycle. You know, every time I've thought we were rolling over, we get kicked back up. I just perhaps think it's different this time. Because of that, I want to remind everybody, in the strong type of uptrend that we've had over the last 18 months or so, it's hard not to look good by going long. You just don't want to be the last person buying. And, you know, best time to buy is to buy at pullbacks because you can set your stop right underneath where it pulls back to. But frankly, in the run-up that we've had, the best thing you could have done is bought and forgot about it. That's probably not the same anymore. When do I go long in a downtrend? The answer is never. Here's the only time to make money, which is the retracements if you go long. And I would use those retracements as opportunities to short. We may go sideways, in which case I'm going to sell resistance and buy support. We are in Palos Verdes this week learning about the multiple different indicators that HGSI has created that helps us in our endeavors. And you'll note that for the first time in ages on most of the major indices, especially the NASDAQ, the Bongo Weekly has gone red, which is probably the best evidence that we have that this time is different and we might expect a little bit deeper pullback and rollover. So if we look at some of the things that we might follow, these are the canaries. The big ones are listed here. Hard not to argue that these were the big leaders in the last market run-up. You can see as an index running from 90 up to 185, from 7 to from July to April, so in 9 months, a double. And you could see a pretty hard sell-off with pocket pivots down, Bongos and forces all red, distribution red, the DMI crossover the wrong way. And ever since we had this red candle high at the high jump, we've seen this market pull over. Now, Thursday, I thought we were going to see a bounce on Friday with a long, the hammer type signal, but we couldn't. Although we opened up and looked optimistic early in the day on Friday, we sold off towards the end. So this tells me that the big boys in the market, the price lines, the Apples, the Amazons, the Google, Tesla, Facebook, LinkedIn, and Netflix are under pressure. Now, last time I was in PV, I put together this list with the LLURs, and the LLURs are holding up better, and again, they had a long-legged doji hammer-like pattern at the 65-day exponential that held on Thursday, didn't do much on Friday, again, traded up early, traded down the rest of the day, and again, these are a much broader perspective of potential leaders. And I'll tell you what's kind of interesting to me is I'm building the leaders profile for the meeting tomorrow. And as I go through this list, AeroCap is potentially holding up. Delta's pulled back some, but is still a big leader. Same with Wabtec. I guess Alliance Data is okay. Package Corporation is back to the 50. That's it. One of the things that I've learned over the years is what was last time's leaders are not necessarily going to be the next bull market leaders. And so many of these great leaders that we identified at the last meeting in the market have sold off and probably are not leaders at this point in time. So market themes, if you haven't looked at your portfolio, the market sold off hard this week, especially momentum stocks. Leaders in retreat, biotech, solar, gold, home builders, and things that have been working this year. World politics are driving oil and gas and related services equipment much higher. Big stocks holding up, and markets at high risk here, but for the most part, most of the corrections are nominal and certainly not in a bear market yet, except perhaps some of our growth stocks. So on that note, steps I took last week, sold off more positions on the performers, the biotechs, especially juniors early in the week. I'm out of margin, raised cash, bought and sold, and bought again VXX, TZA, looking at other contras, and sold calls against some of my long-term positions and bought some puts. So I've gotten defensive, and now let's take a look at the charts. I'm going to quickly jump into TradeStation so I can shut it down. Hopefully this will work. So, this is the big thing I wanted to show you is we are in a full-fledged ugly pattern. Oh, now they're working. So you can see the stocks. You don't need to know what I'm making money on and losing money on, but I'm happy with the numbers there. You can see a pretty robust fall off in the NASDAQ. Down to the lower edge of the envelope. Well, this is a place it's bounced before, so perhaps we're getting to a point where it might bounce. Red on the weekly, still blue on the monthly. You can see the high jump is down to as low as it gets as well. So maybe this is bounce place, but one still has to recognize that you've got red bars there, and that would be concerning as far as any considering going long. At least yet. Compare that with the S&P 500 where you still have a blue bar, blue on the weekly, and you're at the mid-channel of the envelope. So not nearly as ominous looking for the bigger stocks. Now notice as we made higher highs in the S&P, the histogram was already selling off on the MACD, and there's been a lot of divergences in the market, which is part of why I'm concerned. If I look at the big stuff, I look at the Dow, it's actually green across the weekly and the daily, blue on the monthly, and it's living in the midst of its auto envelope, certainly holding up much better than that NASDAQ, which has sold off pretty hard. So small stocks, NASDAQ stocks leading the sell-off. Now something I used to look at a lot, and I thought it might be apropos to look at it again. This is the S&P futures, a continuous contract going back to 2006. 3 colors down here. Yellow represents people like you and I, assuming you're not a hedge fund manager, so the individual investors. Blue represents the net longs and shorts of the professionals, the hedge fund managers, and then the red are what we call commercials. And the commercials could be people that are hedging the position, so I'm going to ignore that and just look at the yellow and the blue. What I'd like to point out is during the 2007 to 2009 strong sell-off in the market, which also you notice, let me just double check this. Hold on one sec. Okay, it's a 40-week moving average. So the 40-week moving average, I just wanted to check on this light line. So you have a 40-week, which is essentially a 200-day moving average, but a 400-week moving average. And you can see once that market rolled over, it did not break back above the 200 or the 40-week moving average for the better part of 2 years. We are still way above that 40-week moving average if you want to be bullish on the market. But you notice as the market was falling, individuals were buying and the professionals in blue were selling. At market bottom, professionals started buying, and of course at market bottom we had enough and we went short the market. Now if you look at the far right edge, you see that the market continues to go higher, and for the first time really in over a year you've got increasing sells. I'm not sure why you can see that on the professionals. So I think that more evidence as the individuals are now jumping in with the highest pressure since the bottom as buyers. Finally, it's time to jump in. Probably time to start worrying a little bit. So I'm going to turn off my trade station. I'll leave it on unless I get another nasty message from my internet provider. All right, so I've looked at that. Let's just give you an idea how bad this market is, like you don't know that already. So this is measuring from end of day Friday to end of day Saturday today, well, yesterday now. And black are those groups for the week that traded up for the week and only looked at things over $2.50 and 150,000. That was the filter. Closing price on Friday to closing price on Friday. One group above, which was the ETS buys, and they still had over, most of their stocks were losers or more than were gainers. And look at the sea of red. Now especially, let's look at the interesting thing to me is the S&P 500 was down only 0.5% for the week. Yet some of our biggies, the HGS 100 was down 4%, the GIF All-Stars were down 5.22%, and the IBD 50 was down 5.82%. The message here, well, hold on before I tell you the message. High beta watch list, which is about 125 high beta stocks, was down minus 9.5. The message to me is you got to be careful, if not crazy, to be very long right now. Now the market may bounce this week, but clearly last week, if you were long going into the weekend and didn't sell your positions, you would have had a very difficult week. Stocks in an uptrend pulled back with Kahuna near free parking, so stocks that have pulled back and then had some momentum off the 50, they were down only 0.37. That's one of my favorite groups. Now, Jeff, you might say, Jeff, I can't buy stocks at the close on Friday. I got to buy them at the open on Monday. So it really looks the same. S&P was down 0.54. And you could see the Market Smith 250, HGS 100, GAF All-Stars, and the IBD 50 all down 5 and 6%. So this was a tough week to make money in growth stocks. We get these rotations. They can be ferocious. They usually last a couple of weeks. So we'll see how much more we have to get. When I looked at the Hindenburg-Omen analysis, I'm looking for the black bars. The last two I see here are 12.17 and 12.6. And we don't see any Hindi omens. Now the other thing I notice is that the number of new highs and new lows are both below 2%, and that's a reason why we're not going to see a Hindi. They both have to be above 2.2, and you can see there's only almost no new lows in the NYSE right now. So all clear from a Hindenburg perspective. For those that are unfamiliar with the Hindenburg, think of the professionals selling to us individual investors, and they're laughing to the bank, and we're getting long when the market's about to roll over. Bucketology tells me that we're a little bit below the midline, so we have more stocks below the midline in the percent B in the S&P 1500. You can see we got about 7% below the lower band. Certainly is not stretched enough to say that it's time to roll to come back. Here was one day earlier with 16%. The market lows in the past, we've gotten as many as 40% of the shares below, and the S&P 1500 below the lower Bollinger Band. This is what good looks like, and this goes back to March 4th, where you could see 20% were above the upper band and 89%. So I look at this as a one-day improvement. Frankly, the indexes were not bad on Friday, but one-day improvement does not get us out of the woods. In fact, if you look at the indexes from Friday, you can see the NASDAQ was up 4.5%, the Dow was up 58, and the S&P was up 8.58. So not horrible by any means, but they were up a lot more earlier in the day. I like to look at the markets. What that is. All right, I like to look at the markets, and I like to look at the markets using Edge Rater here, and I can look at percent B in the change, percent B where they fall between the Bollinger Bands, and percent B times bandwidth. So we had some big kahunas here back on March 13th. We had a number of other large kahunas the past week. So clearly we're seeing a lot of negativity in the market. You can see when we get in these big kahunas to the downside, we get periods of weakness. When you get a couple of days of blue, that's when the market turns around. So we're sitting down here in lots of red kahunas, which is weak market. We're seeing clearly deterioration in percent B. So just to give you an idea, when I see a green percent B, this tells me that the stock closed, the index, and you can see what the indexes are. Well, you could if I copied it right. The index closed at the upper part of its Bollinger Bands, in red the lower part, and when I see something that closed at 0, that tells me that it's sitting right at the lower Bollinger Band, and that would be the IUX. Over here, percent B times Bollinger Band, the so-called Woody bullseye indicator, the red tells you the weakness. So there is weakness throughout the market, even though the big stocks seem to be holding up better. Nothing really looks attractive on this thing as well. I'm not going to spend much time on the George Lee setups in Edge Rater, especially since I don't want anybody to think that I'm very bullish and buying a lot of stocks unless something changes. So let's take a look at the market in HGSI. I did a presentation in PV about the process that I use, and I will post it most likely in the HGSI user forum sometime this week. It really goes through each of the steps I do. I want to make a couple changes, but it might give you an idea of a reasonable process. I always start in Woodward and Brown user groups and Major Markets Plus, and I like to use the T1 because the T1 is all price and volume. One of the things I don't like about the T1 is it does put weight back 2 or 3 weeks, but the biggest weight is this week and especially the last day trading. So you could see using a little bit wider time frame, including a couple of weeks ago, big stocks led by NYSE and the Dow and the utilities are up at the top, and the NASDAQ, the Russell 2000, the small caps are at the bottom. It's no surprise that HGSI-related stocks and IBD 50 stocks had a tough time. I look at 5-day change, I can see oil was up the most. Whenever I see bonds and utilities up, I know that my portfolio is not humming. The big losers were volatility, surprisingly, but the Russell 2000, gold, the NASDAQ, and the small caps. So this is a weak market, but it's much weaker for the types of stocks that we trade. Friday was basically a day that got me excited because I saw some major improvement in my portfolio, and then I got off the plane and half of the improvement was gone. Semiconductors had a nice move. NYSE was up 0.6. volatility, bonds and gold and dollar at the downside. Now, if that persists, maybe we'll see the market turn around here. I remain somewhat nervous. I like to quickly look at some of the key indexes. Whenever I change the resolution of my monitor to do a broadcast, I've got to change the size of all my charts, and of course I'll have to change them all back on tomorrow at the meeting. So let me close this puppy down here and realize I want to do that blinking, so let me just go back here. So, and I'm going to a couple points about the market, and then I'm going to take off a lot of this stuff for this view. We had a negative Eureka, Phoenix come into the market on Wednesday, as well as a kahuna to the downside. Now, this is the S&P 500, and its weekly bongo is still holding up green. There's no force on it because there's no volume. Squeezing with the mobile breakout to the downside on Thursday, but we actually closed up not up, but in the higher part of the range on Thursday, and we had a positive day on Friday. Let's go to something that might be a little simpler to see here. And so you could see for the S&P 500, really not much of a sell-off at this point. In fact, if we want to measure that sell-off and go from the top here, I'll take this top, down to the bottom, we saw 2 in 14 days, so there's nothing there. Now, if we want to go all the way down to the S&P 500 and consider, or the S&P 500 200-day moving average, consider it's going to continue to go up, that's only about a 7% total. So a pullback to the red line here, the 200, wouldn't be that surprising, but this is holding up pretty good. It closed right at the T line, which is the 8-day exponential. From the close down to the what would be still a rising 50 is another 1.5%. So the 50 would be a total of a 4% down. The 200 would be about an 8% down. We're not there yet, and certainly one could be more optimistic about the market when you look at the fact that the S&P 500 is holding up quite well. Also holding up well is the NYSE. You can even argue that it's starting to base here. All right. What else could we look at? We could look at the utilities. Not that I always look at them, but these are a defensive play, and they look like they want to break out to new highs. What's not working? Let's take a look at the NASDAQ. And you can see the NASDAQ has fallen through its 50-day moving average. Doesn't look like a whole lot of positive stuff there. So the NASDAQ, since this has all started, let's just go back here. Take us down to the bottom here. The NASDAQ has pulled back 5.5%. If the NASDAQ was to pull back to that rising 200 or somewhere around in here, you'd be looking at about a 10% return. So that's kind of my target. I'm going to look and see what happens, but in my mind, I'm concerned about 4,000. Now, as I look here, I see several periods of time where the NASDAQ has had some porosity at that 50-day moving average and quickly turned around. So short term, my hope is that we stabilize here and get back above the 50 and resume our uptrend. My worst case scenario is it pulls back to the 200. I won't have a whole lot of long positions if it doesn't make a turnaround soon, at least in the NASDAQ type. Russell 2000, not quite as bad as the NASDAQ, but it too has broken through its 50-day moving average. Tried like heck to get above it on Friday and then pulled right back and closed where it opened. Failed to reverse it here. So I have concerns about these indexes. If I look at what's not working, or what is working rather, let's take a look at gold. This is a not working. Gold, I just didn't trust it until it got above the 50. I liked it a lot better when it got above the 200. When it broke in here, when the 8 crossed below the 17, was probably a time to get out of gold. We're back below the 200. Let's see how quickly it can take it back. If the market rolls over, you might see it. Silver, which adds a little bit of industrial value. to the luster, well below the 50, and certainly in the penalty box. If I look at volatility, we're living in this range now around 14 to 6 to 15. Not as low as it was back here when it got back to the 12, so it could be a little bit surprised that we're not pulling back as far. But we continue to struggle to get much above 20. We had a little burst up here which didn't even make it to 18 and a half. So volatility remains under control, but something's going to give. You're not going to have the market rolling over and volatility staying flat. You'll probably see volatility go up, and if not, then the market might start to move up. Maybe this is a divergence in thinking that perhaps the market's going the right way. We looked at the Russell, sorry about that. If I look at the dollar, no surprise this week the dollar moved up over the last 2 weeks, which the dollar has typically been weak for my portfolio. If the dollar goes up, I have a little bit tougher time. And anything else I want to look here, I looked at the VIX. Semis showed some strength, and if you want to find what's winning in the market right now, here it is. It's still holding above the 17-day moving average, well above the 50. So I think the semiconductor, if I had to find a place to play long, I might want to play in these. And you could see they had a bunch of kahunas about 10 days ago and continue in a very powerful uptrend. So the other thing I like to look at, I don't do it all the time, but I often like to look at the broad market indices. And I look at this because these have volume, because these are actually calculated by HGSI. So for example, the S&P 500 and 1500, which don't have volume, when you look at them as the index created by the exchange or provided, when we use the calculated, you actually can see volume. So let's look at the S&P 500 and let's go into the eye charts. I'm going to actually use the ones from the seminar. And a couple of things I like to look at. So a couple of things. This is let's go to the 1500 because it's probably more representative because it's big, small, and medium. So on the S&P 1500, you could see that the Bongo Daily and the 13-day force are red. You can see that the DI minus have crossed over the positive, but you can also see the S&P 1500 is holding above the 50-day moving average. Again, this represents the 500, which is strong, the 600, which is weak, and the 400, which is middle. You'll also notice that even though we had a small up day of 0.5% on Friday, it was done on substantially weaker volume, and that's a negative there. If we're going to get weaker volume, I like to, it just doesn't give me as much feeling that this is a reversal. I like to look at new highs and new lows, and I like to see that the highs versus lows continues to be, well, above its moving average, but you see it's starting to flatten. If I look at accumulation distribution, again, E's have crossed over the A's, and you could see that the B's have fallen down, heading down towards where the A's are. The D's are heading up, so not pretty sight by any means, and we've closed below the 22-day exponential moving average. I like to look at the percentage of the index trading above their 20, 30, 50, and 200-day moving average with a moving, and they put a moving average on that. And what you could see is we're really way below on the 20, 30, and 50, and a little bit below on the 200, which tells me that we are ultimately going to get to a point where in the past the market has turned around, where as you get deeper and deeper below, less and less stocks below their 30-day moving average, or more and more below the 30-day, I'm sorry, you should have a reversion towards the mean. So we may be getting due for a bounce soon on the S&P 1500. Now let's take a look at the industry groups, 05, and let's see that we have 149. And let's take a look at a short-term indicator, and this is force 2-day up. One of my themes was that lots of things with oil and gas exploration, and let's make sure I don't have any filters on that I don't want to have. I'm surprised to see home builders were up here, but maybe they're turning around. Just if I step back, I see a lot of oil and gas. Here's those semiconductors and system software. Packaged food and meats. Diversified banks. There was some big news on the banks this week, and except for Citigroup, they seem to have held off well. You can see oil and gas, all really come to the top, even refiners. If I right-click on oil and gas exploration, you can see that the index is highlighted. I have no interest in buying anything below that index. So let's real quickly go through these stocks and see if anything in the top 5 to 10 are something that I might be interested in buying. So for those that have not been here before, my charts are kind of cluttered. I apologize for that. And let me make a couple of quick changes on those charts before I go too far. On my PSAR dots, they're too big. So I can bring it down to something like, I'll go to the medium one. And that'll make it easier to see that. And then I just want to make sure that my Eureka and Phoenix I fixed to make it on the NASDAQ. I did. Okay. NASDAQ. So you notice what I'm doing here is I've changed the index to use from the NYSE to the NASDAQ. With the current data provider for HGSI, we seem to be getting better signals on those using the NASDAQ instead of the NYSE. Now you can see my dots are smaller. So very carefully or very quickly, the fundamentals are on the top. You can see what they do by going up. You can look at quarterly earnings, revenue and earnings, a map of where they're going. The next 2 quarters are here. And as you go down with the arrow, you can see additional fundamental information, including how many shares are traded. On the top, we have the Bongo Weekly and the Bongo Daily. The yellow here is middle is a C accumulation. Then we have the forces. Here is the high jump. Here's the DI crossover, which I think I'm going to close up for now. I think that might be leaving my scan. This line here will be for viable gap ups, of which are there none. Here's a squeeze. Here's the mobile breakups and breakdowns. Blue is pocket pivots. Magenta is pocket pivots down. Here's Bollinger Bands. This line here is the group strength. So you see the strength in group coming into these oil explorations. PSAR buy, PSAR sell. 8-day exponential magenta, and then a 17, a 15, a 200 simple moving average. So EOG, let's give it some more data. So not quite a lower left, upper right perfect. It's had some deep pullback, but it looks to me like, as you'll see, many of these look like pocket pivots, breaking out to new highs. Pretty much everything is green here from a squeeze. This looks like it wants to run. Pioneer Natural Resources, a little bit closer to the 50. I'm probably less interested there, although it did have a PSAR reversal here. Expensive stock. Dividend Energy, similar to EOG, looks like it's breaking out with pocket pivots. Everything is green, Kahuna and volume. The next one on the list is Noble Energy, breaking out with pocket pivots. 2 days of Kahunas, everything is green. Pick your poison. Here's Continental, breaking out to new highs and pocket pivots. Kahunas, everything is green. Talk about a wolf pack. You have a number of stocks here that look very viable. Cabot's pulled back too far. It looks like it's reversing. I'd rather buy one of the things that's above the 200-day moving average. Here's Anadarko Petroleum, also below Concho, breaking out to new highs. Pocket pivots, everything is green. And then I just wanted to look at a couple more. Gulfport, breaking out, pocket pivots, Kahunas, good volume, everything is green, good earnings per share growth. I wanted to look at a couple. Let's see if I can find them. Here's here's Diamondback or Fang. This is Gil Morales, who'll be speaking with us tomorrow or later today. Breaking out, pocket pivots, everything is green. Mobile breakup from a squeeze with a pocket pivot on Thursday. And then a cheaper one that looks good to me, pulled back to the 50, had a Kahuna, pocket pivot, volume coming in, everything green up here, starting to accumulate, is Kodiak Oil. Bottom line is, these are what's working now. 5 or 6 of these looked attractive. You have to make your own picks, but this is a hot area right now. Now, whether it stays that way after things settle down in Ukraine, who knows? But right now, they look good. System software, Microsoft. The world is different right now. So let's very quickly look at these. Microsoft, Pulled back a little bit on Tuesday, Wednesday, Thursday, had a nice day on Friday. Everything is green. I guess what's nice about Softy is it pays about 3% and is sitting on a ton of cash that they might be displacing. Not a typical growth stock. Oracle has been going sideways for a while. Did break above its PSER. Everything is green here, slowing earnings per share growth. Symantec, well below the 50, so we're going to skip it. Quihu, this was a huge winner. It's well down below the 50. There's a lot of stocks like this that have pulled back that you might want to build a watch list of fallen angels and see if any of these want to become leaders with the next evolution of the market. So that was System Software, Integrated Oil and Gas. This is kind of interesting because Petrobras was one of the big dogs, which has had a big sell-off, but seems to have bounced off of its multi-year lows. It's going to have a lot of resistance here at the 200. Will not be my favorite one to buy. Exxon, now this one I like a lot more. It's above the 50. Look at the group strength here. Everything's turned green. Kahuna's 2 days in a row on huge volume. This is a pattern that I like a lot. ConocoPhillips looks like the same pattern, breaking about here. Strong group rank. Everything is green. So these big integrated oils, even BTP, breaking above the 50. So I guess oil energy is hot whether you're big guys or you're little guys. Less this is below the 200, so I wouldn't be as interested there. So you could see the 5-day changes on some of these was quite strong, demonstrating the strength in this group. Group number 4, oil and gas equipment. Well, I own a lot of Halliburton, so I'm happy to see this list. And so I know several of these will look good, and this would be pick your poison. Here's Schlumberger, sort of a cup handle, breaking out, all green, pocket pivots, had a couple kahunas about 8 days ago. It's got some earnings per share growth. Clearly a great company and leader. Baker Hughes, similar pattern, breaking out. National Oil Varco, a little bit safer perhaps, coming out of a confluence of its moving averages here at a PSAR flip on Friday, but certainly not the leader in the group. Halliburton is a lot like Schlumberger, breaking out of a squeeze, mobile breakout. Everything is green above. So a lot of strength there. Semiconductors. Well, if you like Microsoft, then you got to be powered by Intel. I'm joking, of course, but Intel looks like it's making a move here. Everything is green, so it had a mobile breakout from a squeeze on Friday. On a tough tape, it closed at the upper part of its range. I don't get that excited by this one or Microsoft, but it does have a 3.5% dividend yield. Safety, perhaps GT Advanced. I thought they had something to do with solars, LEDs, industrial markets. GT Solar, that's why I thought it had to do with something with solar. This has had a very nice run up. Pull back. It looks like maybe it wants to settle and go again. It's still underneath its PSAR, so I put this on a buy list. The daily bongo is still red, but the forces turn green. This might be ready to run. I don't like its lack of earnings, but earnings don't seem to matter all the time. Taiwan Semiconductor looks even better. Had a PSAR flip this week. Everything is green. Pull back to middle of the range on Friday. This is one that could be a leader if the market turns around as well. And then you've got the solar stocks, and they all have the same basic pattern, which is they've sold off hard, and they had a Morningstar pattern on Thursday, Friday, Wednesday, Thursday, and Friday. And it'll be interesting to see if they can continue moving up or if they're just going to be beaten right down. Its earnings are out. Look at the earnings per share growth coming into Canadian solar. This has got, I believe, $2.50 projected next year. So if that really happens, one would expect these stocks, which are turnaround plays on their earnings, to really go back up and take out old highs. For now, they're currently under pressure, but some promising things there. JKS kind of looks the same way. Let's see what that's in here. Trina Solar, the same pattern off the 200. So, they're all downtrending until they break above their 50s as far as I'm concerned. But they're all giving me some evidence that maybe there's going to be a recovery in solar. One that I do like a lot is NXP, and you could see it's just gone sideways with the weakness in the market. You might wait for a buy signal. Go back. Next one are automobile manufacturers. Well, it's Tesla had a 2.4% move on Friday, and I'm sure that that's why it's sitting up here on big volume. Let's just take a look at the top three. GM announced some more recalls over the weekend. So I look at Tesla. Now, if you squint your eyes, you'll see that's right on the 200-day moving average. Let's just take a look at that here. So that's really an interesting time to consider buying. If you like that, take a look at Michael Kors. Take a look at activists. You're going to see a lot of former leaders have pulled back to that 50-day moving average. So this may be setting up, for all I know, to turn out to be a time to buy. But it's going to have to show that to me. It's going to have a move up off the 50 on volume, whether it's a kahuna, a pocket pivot. Is it going to have a mobile breakout? Right now it's in a downtrend and it's under pressure. Ford below its 50, below its 200. Maybe it's going to make a run. It's in a downtrend. I'm skipping it. And GM, like I said, I had some problems over the weekend. So Tesla and the volume, I guess, plus they all closed up for the day, helped here, but I'm not too impressed. Aluminum, kind of hard to believe that that's here. Only one above the moving average is Alcoa. And I look at it and I say, okay, sort of sideways breaking out here. Didn't have a great day on Friday. Does make earned money with some earnings growth acceleration. Not my poison, and the rest of the group is below the index. Number 8 is home builders. I'm surprised here. Of course, I sold off mine this week, so do I have to get back in? D.H. Horton sold off hard. Looks like it wants to move up. Gapped up on Friday, closed near the high of the day. It's got a lot of overhead resistance, I would think, with the 17 and the 50. You could see the group had turned down. But turned up over the last week. Everything's red above, not a really beautiful chart. Fortune, everything's red above, trying to get back above the 200. Pulte, probably healthier. It did not break below the 200. Closed right on the 8. Maybe it's about to move up. We'll have to see. KB Home looks pretty ugly to me. So I thought the home builders were ugly, and I still do. Integrated telecommunication services, gosh, who would have thought leaders, AT&T, Microsoft, and Intel? Am I back in 1987? So I look at AT&T. I guess it traded up for the week. That's why it's a leader. I don't like the earnings per share growth. I don't mind a 5.2% dividend. Let's just take a look at this on a weekly chart. Let's take off all my stuff. And, here's the daily. Here's the weekly. This was a nice time to think about buying it. If you want to play the dividend, you're not buying it because it's a great growth stock in the vein of Cancelim and the other things that we follow. Frontier, now that looks a lot more interesting. It's a very cheap stock, a little bit over $5. Very interesting. I'd have to figure out more about this company, but a 7% dividend, market cap of $5.6 billion. Wow, I kind of am intrigued here. 7.1% dividend yield. Weekly chart. Now this would be a bothersome thing. If you can get above this 200 weekly moving average, then I'd be really interested. But something's going on here. I like the chart. I like the stock. I'd like to see it get above that 200 weekly. But I love the 7.7% dividend. CenturyLink. This is what I want to see Frontier do, break above that 50, or 200 rather. It too pays a big dividend. So I guess because of the uncertainty in the world, this is kind of like the utilities and the REITs and making it up to the top because it pays a massive dividend. Diversified banks. As I mentioned, they went through some testing of their ability to handle market catastrophes, and several of them did well. Wells Fargo was one of them. This has been a good stock to own. It's certainly a leader, and nothing looks differently there. A lot of foreign banks in this that I'm not really too interested in. All right, what else would I look at if they're outside the top 10? All over the place are chicken. I guess they're not in this group. Corrig, remember that picture I showed you of the fallen leader? Here's another one. Get back here. Pull back not quite to the 50, setting up might be a good place to run. Look at the group strength here. That's about all I was interested there. Drillers, you could see. Diversified metals and mining, that's kind of interesting. Are these coming off the bottom? Freeport-McMoRan, copper and gold. And that's what they are. They're bottom. They're right below the 200. Maybe something's changing here. Southern Peru Copper, had a pocket pivot and a kahuna on Friday above the 200. Maybe something is happening here. I bet they pay dividends. This one pays a 1.7. Freeport-McMoRan, which made some interesting acquisitions, some oil properties, pays a 3.8%. All right. To the downside, interestingly, there wasn't a whole lot. Pharma, personal products, and environmental. Just take a look at some of these pharmas. Some of these got hammered. You could see 5-day performance. Look at some of these 5-day performances. Minus 10% for Salix and Jazz, 10% for Clovis. A lot of these had run up a lot during the recent market move, and some of them took a while to sell off, but boy, they sold off hard this week. And just take a look at some of them. This here, you can see Friday for Clovis Oncology. Salix, below its 50. This is going to be a leader going forward, but it's not necessarily time to be buying it now. Shire, below its 50, has dropped. Jazz is hammered. Not sure when Jazz becomes something to think about again. It still has good earnings per share growth. Even Pfizer had a couple of bad days, but it's much better. It's still above the 50, and it pays a 3.3% dividend. Don't see biotech there, which I thought was interesting, but let's just go in and take a look at biotech. Okay, let's force up. So strength in biotech, not a lot. And you look at Ariad. This is one of my holdings. Ariad was up 5% on Friday because there's a lot of rumor of a takeover and potentially a takeover by. Now it's Jazz, but it's sort of living on this 50-day moving average. It's doing absolutely nothing. It's going to have overhead resistance here. And the only reason why I'm owning it is I know the company, and I think that for somebody that wants to get into the oncology business, there's no better takeout candidate right now. So not much to the upside. Let's take a look to the downside. And let's look at 5-day performance, and let's look at some of the worst. This is unbelievable. Biogen IDEC is a classic, great company, great story, and these are a result of the letter Congress sent to Gilead, and for something that's probably necessary as Congress wants to start to take a look at drug pricing and start to put pressure on pharma to lower them. There is no legal precedent for that. In fact, in 2003, they passed legislation that would keep pharma from negotiating drug prices. But it's no question that drug prices are high, and anybody that makes expensive drugs, whether they're orphan like Biogen, cancer drugs like Regeneron, eye drugs like Regeneron, hepatitis drugs like Gleevec, they got hammered this week. So the letter has been out about 7 days, and the letter came out here. Now, it sold off a couple days, but you could see what a dramatic pullback. And this is one of my favorite companies, and, I bet it comes back, but it's from high to low, it's sold off almost 20% in 7 periods of time. What a tough stock, and what a tough move. That's Biogen IDEC. Regeneron, to close on Friday, down 15%. And you notice that Friday, it opened up, failed at the 50, and had a hard close. Be interesting to see if it comes all the way down to the 200. These are going to be leaders again. Puma, an expensive one. I think it's expensive because of lack of shares. It's only got a market cap of $3 billion. They've got a portfolio that's got a number of oncology and other drugs in it. selling off pretty hard. Aniline pulling back to the 200-day moving average. Anything else that's worth talking about? Celdex is one that I got out of early in the week, and you could see when it broke above the 200, there's no reason to be in this stock. And it got hammered on Friday after trying to make a stand on Thursday. Fallen leaders, these things are just ugly. NPS is pulled back to the 200. Is it a good place to buy? If the market bounces, absolutely. But if the market sells off, no. So a lot of these biotechs got hammered this week. All right, I'm starting to get tired, so we're just about finished. Let's quickly do a couple of my favorite bottoms-up analysis. All securities. Let's take a look at Galardi's sprinters. Do you notice how few sprinters we have today? I have another way of looking at it. It takes out filters and stuff. 42. This is about as low a number of sprinters that I've seen in ages. Sprinters are technically sound stocks. And what do we see on here? A lot of trucking. We're seeing semis, packaged food and meats. There's my chicken companies, and auto parts and equipment. So I might want to look at some of the best of these. So let's just go through the first 10 stocks and see if we have anything that's a winner. Pilgrim's Pride, this and Tyson's, which I believe are both chicken plays, maybe because of issues with pork. Chicken's doing well, certainly in a nice move up, and with a bunch of pocket pivots, mobile breakout, still on a sell sign by the PSAR, but right underneath any move up, and that will flip to a buy on Monday. Martin Marietta, so defense plays, many of them are running up their 17-day moving average. This one's not, it's the same. Here's a unusual refiner. I think they have some ethanol story as well. Big move up, pullback this week. Nice day on Friday. Maybe it's getting ready to run again. Orient Energy, cheap stock, pullback. Traded up on Friday out of mobile breakout of a squeeze. Everything is green. Kahuna in huge volume. I don't like the earnings per share growth. Tyson's another chicken play. What a beautiful, tight little stock. It's going up. Everything is green. No reason to expect it to stop. Aerotech is a cheap stock, probably aerospace and defense. Breaking out again on Friday. Everything is green. Huge volume came into the stock. That's usually something that might tip you off. Freescale had been a big leader, now going sideways. Mobile breakout from a squeeze on Friday, mostly green. It looks like it wants to run again as well. RF Micro is one of my favorite stocks in the market. It had an acquisition that powered it up here. It's pulled back a little bit of a flag. When this flips its PSAR, I'm going long. Look at the earnings per share growth coming into RF Micro devices. A lot of automobile parts manufacturers are looking interesting. Here's MPAA, nice run up, pull back to the 50, which would have been a time to buy, but even now it's not much extended from there. Mobile breakout from a squeeze on Friday. Everything is green and a big kahuna on Friday. So some interesting stocks there. I would point out that with all the new smart groups and the designer, that what you might want to be doing is going in and doing a group inclusion report and identifying your favorite groups. And I did one earlier, so I'm just going to go and show you the results. But I picked sprinters. I picked my favorites from Ian Woodward and Ron Brown. I picked my mobile breakout from a squeeze. I picked my pullbacks. And then Morales and catchers, I picked Bible gap ups and pocket pivots. And I generated a list. And that list had 30 stocks in it. So I'm going to rapid fire, go through those 30. And then I'm going to say goodnight. So let's just go to scorecard no index view, which go down here, find my JFPV, and very quickly I'm going to show you what I think are some of the best stocks in the market, and then I'm going to say goodnight. Pilgrim's Pride, we already looked at it, not much to say except it's in a nice uptrend. I want to see the PSAR flip, but if I was to look at this, I would see that the PSAR is at 2015. It closed at 1983. So if it goes up 32 cents, it's going to flip that to a buy, and that might be an interesting signal to go into Pilgrim's Pride. PGT, this chart doesn't do it justice, and it needs a lot more time to really help. You can see it's had a nice run up. It's gone sideways. Here's your cup, your handle, and is it breaking out? And is it time to get in? It might be. So I like this one a lot. I don't want that much space. So that looks interesting to me. Look at 3 kahunas last week, big volume on Friday, breaking above, mobile breakout, and a PSAR flip. This is one that I would be interested in buying on Monday if the market is at all cooperative. Aerotech, where I looked at, small stock, huge volume came in, breaking out to new highs. Everything is green. Continental Resources, we looked at this earlier, one of the oil exploration plays, breaking out to new highs. Pain Therapeutics, PTIE, another cheap stock. Not my cup of tea, but if you take out all my stuff, you see a stock that's had a nice move up, a little bit of a pullback here. Maybe it wants to run again. It doesn't make any money. It's a cheap stock, so I probably would pass on that. Here's FANG breaking out to new highs. We looked at that earlier. Orion Energy, a cheap energy stock we looked at earlier, breaking out here. Restoration Hardware. It had some good moves. You can see a big move up here on the weekly. Sort of had a big move on this past week off the 50 weekly moving average. I think this one wants to go higher. It had a viable gap up on Friday. Everything is green. Look at some of the earnings coming in the future months. Look at that volume. This might be something you want to be in as well. We already looked at Tyson's. There's your tight lower left, upper right. Everything's green. The PSAR is supporting. Love it. RF Micro, I love that one. We looked at it. Gentherm is another automobile manufacturer. A little bit of a pullback here. Give me a kahuna, pocket pivot, viable gap up for some volume. Might be time to get into that one. Weatherford is another oil services stock. I like some of the others better, but it looks like it's breaking out again. Had a kahuna on Friday. Rambus, I showed you the strength in the semiconductors. Having a nice move up. Everything is green. I guess it's got some earnings. Not one of my favorite stocks. Visteon is another one of these automobile stocks. Automobile parts, lower left here about 70 up to 87, so it's had about a 30% run here. Pull back to the 50, had a PSAR flip, mobile breakout from a squeeze. Everything is green in a kahuna. I like Visteon a lot. That might be something you might want to go looking at. EOG, we looked at earlier, breaking out to new highs, oil exploration. Kodak Oil, a cheap oil stock. Penn Virginia, another oil and gas stock. What a great move this has made. Everything is green here. I thought this used to be a casino, but it's oil exploration. I think it's a fracking recipient. We already looked at MPAA as another automobile part stock, breaking out, mobile breakout from a squeeze and a kahuna, all green, looks good. This is, I thought, oil services again. Enough is enough, but here it is breaking out, new highs. Had a tough day on Friday. Everything is green. Red candle high at the high jump is not where I want to be buying. I like the volume that's come in, but I think this is likely to pull back some. Take-Two Interactive, pull back. Does it want to run again? Up to you. I'm not going to buy that one right now. Helmerich & Payne, another oil services company. I believe, or is it a driller? Oil and gas drilling. Lower left, upper right. Mobile breakout, everything is green, extended, makes money, pays a 2.3% dividend. Matador, another energy stock. Do you notice how many of our GIFs are energy stocks? What does that tell you? It tells you that this is a market under pressure and they're running to things that they can hold that have value if what's going on in Ukraine expands. Constellation Brands is alcohol, I think. Yeah, it's just. And it's gone sideways for the better part of 3 months. Is that a cup and a handle and you're waiting for a breakout? Look at the earnings per share growth. Let's drop down here and see if we had anything interesting. We had kahunas, 2 of them last week, and a tough tape, mobile breakout from a squeeze. I like it. Quick add to group. buy watch. I want to take a closer look at that. The education stocks got killed. This one had a big reversal day on Friday. I still don't like the education stocks. Southwest Energy, another energy stock. Here's one of my favorite holdings, United Rentals. And this is what a move this puppy has had off that 200 back here in June of 2013. This is in a big bull run. It made the screen again today. Let's just take a look if there's anything new that's going on here. Don't want to see that much of a look. It's just running up to 17. It's underneath the PSAR. It had a squeeze and a breakdown, but quickly got back above the 17. Something to put on your pullback to support watch list. Not saying to get into this one yet. Sanchez Energy, another energy stock. SanDisk, a semiconductor stock. They make a lot of the things that I use for storage, and you can see a nice run up here with a mobile breakout. Applied Materials, another semiconductor manufacturer. Chicago Bridge and Iron, again, doesn't look that hot right there, but if you give it some space, you see it's had a big move up. Had a pretty rough pullback earlier this year, but it's pulled back. Is it ready to run again? Looks like it gapped up on Friday. We'll have to see where it's going to go. And that's it. So let me just do some concluding remarks. We're having a great time as usual in Palos Verdes. Tomorrow we're going to create the LLUR index to look for stocks that could be evidence of whether the market continues to go up from here. Obviously, this is a market under great pressure. You need to take responsibility for your own money. I think this is a market where being mixed long and short might not be the wrong thing to do. Oil and gas certainly are working now. You're going to have to make your own decisions about what you're going to do, but it's not a period of time that you should take lightly and without concern about what the market's doing from a bigger picture. So invest safe, watch your stops, don't lose don't blow your account. Sometimes in a market like this, it's better to go to cash and wait to play again another day when the market calms down. On that note, I am going to say good night. Look forward to seeing all my friends again tomorrow at the HGSI meeting. You all have a great one, and thank you.